positive signals emerging from global markets have been propelling Indian markets to their 52-week highs. US inflation sobering, and also the oil prices being range bound augurs well for India. The risk on mood for investors are to an extent back, and they are definitely going to look at emerging markets like India. As we had mentioned earlier, a lot of emerging market funds who were invested in China are trying to exit out of China, and a significant part of that flow will definitely be coming to India over a period of time. See, the emerging market funds which were BRIC focused have now problems in Brazil with a populist left-leaning president getting elected. Russia is in the midst of a major geopolitical crisis, and China again in the midst of a at least capital market chaos. So India remains the only acceptable geography for investment by the emerging market funds, and this is creating a positive vibe in Indian markets. Apart from that, the domestic macro data also looks good. The GST collections have been record, and that does show that there is underlying traction as far as economy is concerned. Now, the only factor which is bugging the markets or the analysts has been the slowdown in rural demand, and that's real. FMCG numbers did show that rural demand has actually slowed down. We are hoping for a recovery in the near future. However, as things stand today, the rural demand definitely is creating problems with companies having rural businesses and rural distribution. As far as Indian markets are concerned, we continue to believe that investors would do well to selectively pick stocks which are domestic focused, having significant potential for expansion in the domestic markets. Amongst sectors, we like construction and infrastructure, which has got significant tailwind behind it, and also the valuations haven't reached the optimum or peak levels. So Larsen & Toubro continues to remain our favorite. So does some of the smaller construction infra companies like IRB Infra, which has been doing a lot of right things by hiving off assets through investment IT in it structures. We also like some of the domestic focused pharma companies, both Indian as well as global multinationals which have Indian subsidiaries. Sanofi does look good at current levels with the product pipeline and distribution network. We also like Torrent Pharma as far as Indian pharma is concerned. By and large, investors would do well to focus on domestic focused companies. However, there is another window of opportunity which comes where the companies are replacing China as a part of the value chain of global manufacturers. So specialty chemicals and chemicals do remain our favorite, and some price corrections in the recent few weeks and months provide opportunities in specialty chemicals and pharma. We like Deepak Nitrite, we like Aarti Industries amongst the specialty pharma companies at current valuation. Thank you.